on to the Sasol schemes, and remember there are two here. The one which was fully funded and has a special dividend which supports it, which has the code SIPBEE, and then another one which has the code SOLB1, which is more of a straight-up scheme, which are one-for-one conversion. We'll look at the share charts in a minute, but remember these two things were structured nearly 10 years ago. I think it was like 2008, and they're getting quite close to their expiry period. Yeah. Craig, take it away. While those charts come up, what do you like about these? What do you advise? Why has the one got a share chart which goes sideways only? There it is.
Yes.
But of course, you know, I suppose sideways is better than up or down. And why does the other one look, I suppose the other one tracks the Sasol share price. Tell us about these two.
Yeah, so this is Sasol Inzalo. This is the funded scheme.
Yes.
So effectively it was about 93-94% debt funded.
Yeah.
Wow. So highly geared, and pretty much you've had Sasol falling over or not going anywhere over the period. So when the deal was struck in 2008, Sasol was at 366 Rand a share. Or it was at 400 Rand a share, but the deal was struck at 366. Yes. Sasol's at 390. You know, so it's not been a good period for Sasol. So as a result of earnings being a bit lower than expected and such a heavy debt burden, we've seen with Sasol Inzalo that it hasn't given much by way of returns.
Yeah. The other one?
So the one point to make around Sasol Inzalo is there may be upside. If you buy the stock, you're betting that Sasol itself could write off some of the debt.
Okay.
Okay. So
that's interesting.
At the moment, the Sasol shares within Inzalo are worth about 6.4 billion, but there's debt of 7.3 billion.
Yeah.
Wow.
Of that 7.3, 5.5 billion is secured by a guarantee from Sasol.
Yeah.
Okay. So if Sasol were to write off a significant chunk of that, then those shares are arguably worth a lot more.
Interesting.
But it becomes a bet.
And when is the deadline? Is this 2018?
September 2018.
September 2018. That's not a lifetime away.
Yes.
Just quickly explain the Sol BE ones.
Sol BE one, so that's a straight for this. So no funding. It's a discounted share.
Yes. So people got into them at a lower level.
You go in at a discounted price. Currently trading at 340 Rand a share. Yeah. Sasol's trading at 390. So it's about a 13% discount, which if the discount closes equates to a 15% return.
Yes.
Forward dividend yield of about 4% on the Sol BE. Because remember, they get the same divvy as Sasol ordinary shareholders, but because of the lower price, the yield is slightly higher.
So I guess you'd be attracted to these in those scenarios, but right, just quickly for the record, how do you feel about Sasol per se? What do you think the prospect is of the underlying price going up, down, or sideways?
So, you know, they operate in the oil sector, if you want to call it that, and we've seen the oil price sitting at $51. There's not much action there, but Sasol actually has managed to sort of trot along, notwithstanding their very low oil price. So it's very interesting to see what they'll do, especially in the US.
Exactly, with that whole new plant and so on.
Yes.
So there are some risks out there, but at the same time, the company's still very cash generative. They've got a bit of a fight with SARS going on. That's something to keep in mind.
Oh, no.
12 billion scrap with SARS about, you know, historic taxes of some sort or another.
Yeah.
So what else do we have to say? The other thing is that these things weren't always listed on the JSE, but they decided for one reason or another to get in and get set on the JSE. So people like you that have got a qualified account at your broker, any broker can buy them using normal money.
Yes.
So the qualified account is the process that Bright was complaining about earlier. So you got to sign a 36-page BE contract.
And verification process to say really you're blank.
Yes. So apart from going there and showing yourself,
it's not good enough.
It's a bit of a process. But with this one, the point I was trying to make earlier is that if Sasol does nothing for the next year, you'll make a 20% return.
Yes, exactly, because you'll close out on the conversion.
You'll close out on the discount, and
that's not bad.
If Sasol were to drop, you'd get a lower price, but if it were to go up even marginally, 10% over the next year.
And these things trade at a slight discount, in part, I guess, because there isn't a perfect market. It's not like everybody is like on it,
efficient
and that there's
yeah.
thousands and thousands and thousands of people participating in the market every day. I don't know. The liquidity is a little bit limited.
Well, given the volatility of Sasol,
Yeah.
it's driven by the oil price and the currency. I think 13% is a pretty decent discount
Yeah,
for a
it's kind of
1-year
appropriate.
maturity.
So hot or not? This is tricky because it depends on your view in part of these various intangibles and Sasol's propensity, perhaps with the first one, to do a little bit of a write-down. See if they feel generous.
Well, that's the thing. I'm going to take a bet on management, and
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 say
I
yes.
hope they follow the Valco Mizani
Yes.
lead.
Yes.
Yeah.
No, it's not
Because
impossible.
it would, I know, just the PR of having 300,000 shareholders losing all their investment, I think would be a bad thing. But whether you make much upside from the 40 Rand, I'm not too sure. But I think I'm willing to take a bet on them, not a big bet. And then with the Sasol BE, I think given those dynamics of a bit of protection, 20% for a flat market,
Yeah.
20% return, geared return if it increases, I'm prepared to take that risk. So I'll say hot on both.
Hot on both, right?
Yeah, I'm taking the same bet. I was actually going to say that on the Inzalo shares. I don't know. It's interesting at this point.
Yeah, I think you could be